Hello, everyone, and welcome to today's webinar. Appreciate everyone joining. Looks like we've got a nice crowd here. So today we're going to be going over the differences and considerations in deciding whether to open a bank account or a brokerage account. Please like this video and subscribe for more videos like this. We're also going to be fielding live questions here in the webinar. If you go on YouTube, you'll be able to enter your questions on the live chat. All right, so let's get started. Okay, we got a question already. Please go ahead with your questions. We got a question from on the live chat. We'll wait for you to tee up your question. In the meantime, we'll get started. So just to tee up the topic here, it's important to understand the roles of the different parties. So when you're setting up a solo 401k, you're doing that for your business. In order to have a 401k, you need to have your own business, or you need to have a business. In order to have a solo 401k, you have to have your own business and not have any employees. So your business is the sponsor, and then you have a separate 401k, which is a retirement trust. So that's a legal entity. And then you have to have an account for that plan. So our company, My Solo 401k, we're an IRS approved plan provider. So we provide the plan documents, we provide all the ongoing compliance support. Then you have the account provider. That can be a bank account or a brokerage account. And then you are the trustee as the business owner. Under the IRS rules, it's clear that you can be the trustee. So you're the person that has account authority. So we do have a question here, whether or not you can have both bank accounts and brokerage accounts. And the answer is yes. So you could have, for example, a bank account in order to have debit card access, and we're going to get into this in a little bit with the slides, or in order to be able to get access to bank checks. And on top of that, you can also have a brokerage account, because let's say you want to be able to invest some of your money in equities or a mutual fund. So you can have both. And then we also got a question here regarding a loan rate. So that's actually a different topic, but we'll just knock it out since I appreciate you joining, and we always welcome questions. Is a loan rate 5-year CD plus 2, if that be approved by the IRS? The answer is it needs to be a reasonable rate. Based on the guidance from the regulators, a reasonable rate could be prime plus 1 or a CD rate plus 2. So yes, of course, you'd want to look for a comparable CD rate. So if it's a 5-year loan, you're looking at a 5-year CD rate and whatever the amount of the loan is. So if it's a $50,000 loan, a $50,000 CD. So we got another question from the same individual about whether or not you can have both accounts at the same time. Yes, the answer is yes. We've got plenty of people who we help them get bank accounts set up as well as brokerage accounts, and they can move money between the accounts. Let's say you want to make some type of investment that requires getting a certified bank check. So you need a bank account for that. And then let's say between investments, you want to move money over to your brokerage account so that you can invest in mutual funds or equities in between deals. So the answer is yes, you can move money between accounts. It's not a taxable event. It's not a reportable event. You just move the money. And then we've got another question here from Jim regarding non-conventional investments like real estate. And we're actually going to touch on this as we go through the slides here. He's asking about, looks like REITs and crowdfunding, or not REITs and crowdfunding. He's asking about individual ownership. So, and we've touched on this in some of the prior presentations, and I'm sure we'll do so going forward. But the answer is yes. You can, with our IRS approved plan, you can invest in real estate where the 401k actually owns the property itself. So not just a syndicated deal or a REIT where you're owning it indirectly through another entity. Okay, great. Well, I love the questions. Thanks so much. Keep them coming. We will go ahead and get started here. So again, this first slide here, the idea is to focus on the, to introduce the concept that there's different roles here. So the custodian of the cash, that's going to be the bank or the brokerage firm. Let's say you have the brokerage account for your solo 401k at Schwab. They are holding the cash. They're holding your traditional investments, like if you buy Netflix stock through the solo 401k. Same thing with the bank. They're holding the cash. They're holding the CD. But if you go out there and you invest in a piece of real estate, you need to title that real estate in the name of the solo 401k. You're not going to turn the title documents over to the bank or over to Schwab, whoever has the account. Then you are the trustee. So that means that you're the only one that has signing authority to access the account and to make the investments. We don't hold your money as the plan provider. Our role is to provide compliance support, is to provide the IRS document. We educate our customers in terms of how to make investments, but you don't give us access to your account. You don't, when you're rolling over money, you don't send a transfer check to us. You don't give us the trust or the title documents when you buy that piece of real estate. So, and then finally, it's important to recognize the role of, in terms of compliance support. So if you have a question about how to make that alternative investment, you're not going to go to the bank and ask that question. You would go to the bank maybe if you need online access to your account or if you need a new checkbook, right? But you're not going to go to the bank and ask, okay, well, how do I invest in real estate? How do I take a loan for my 401k? That's where we come in to provide that compliance support. We prepare the loan documents, for example. Okay, so we've got another question here. Who can be designated to have authority to sign? Well, you can give account authority, for example, to advisors. So when let's say the brokerage account is set up at Fidelity. Fidelity's got a form where you can designate your advisor and give them authority to trade on your behalf. Just like any investment, you could give a power of attorney to somebody to act on your behalf. So the same holds true here with the solo 401k. Most of our customers, of course, are not looking for that feature because they like to take control and have control over their investments. That's part of the reason that they come with our plan, because you get the checkbook control with it. Okay, so let's compare the bank and brokerage account options. So we're going to go through the next few slides and highlight some of the key differences and considerations. So when it comes to alternative investments, you're able to do both types of investments through the account. So it's not dictated by where you select to have your solo 401k account. We have some folks who say, okay, well, I've set up the plan with you. I want to have my brokerage account at Schwab. I called Schwab and they said I can't invest in real estate. Well, that's not true. First of all, you can invest in real estate through that Schwab account, because what dictates what you can invest in are the plan documents, and our IRS approved plan documents would allow those types of investments, of course, subject to the rules, right? So regardless of who has the account, what governs the account in terms of what you can invest in are the plan documents. And again, our IRS approved plan documents allow that. So you're actually going to be able to invest in these types of investments with both accounts, but there are some differences in some of the features. For example, you'll notice that you can do both real estate in both accounts. You can do promissory notes in both accounts, private equity, tax liens with both types of accounts. Because what you're doing is you're wiring money or sending ACHing money from your respective account to the investment provider. So you can send money from both accounts to make both types of investments. You notice the difference though, with the bank account, we talk about cryptocurrency and precious metals. So that goes to the features or how you actually invest, with our customers in those types of investments and under the rules. For example, with precious metals, you can't hold precious metals at your house if you invest. You need to have them either at a safety deposit box. So that would be a reason you would have a bank account, or you have it with a specialty trust company that will hold that investment on your behalf. So precious metals would be a reason why people would get a bank account, because they want to get that safety deposit box to store the coins. So cryptocurrency, in order to invest in cryptocurrency, you typically, the way that you do it is through a cryptocurrency exchange. So like a Gemini, for example, or a Kraken. So in order to fund that cryptocurrency exchange account, you need to fund it with fiat money. You need to fund it with cash, right? So under the requirements of those exchange providers, they generally want to see an ACH come from an account that's titled in the same name of the cryptocurrency exchange account. So you would have an account set up at the exchange under the name of the solo 401k, and then you're going to need to ACH money to that account. So you cannot ACH money out of the brokerage accounts, like at Fidelity, Schwab, the typical ones that open up accounts for these third-party plans. You can wire money out of those accounts, but you can't ACH money out of those accounts. So if the cryptocurrency exchange is requiring you to ACH money to fund the account, and it's got to come from an account that's titled in the name of the plan, because it's got to match the account set up at the exchange, well, practically speaking, that means you're going to need a bank account to fund that account. Okay, so we've got another question here. Looks like so we've got a person who set up an account at Bank of America, and Bank of America is telling them that they need a $1,500 minimum balance in each of our accounts. They're not sure what a solo 401k is. So Bank of America doesn't seem feasible if I have to leave $3,000 and earning nothing. That's a good point. So, I mean, it sounds like a Bank of America issue for you. I know that some folks, they might have multiple accounts, say at Bank of America. So if the bank is willing to look at, even though this account for the solo 401k, of course, is not set up in your name, it's set up in the name of the 401k for your benefit, or for you and your spouse's benefit with two accounts, they might be able to look at all these accounts as one account for purposes of waiving, say, that $1,500 minimum balance. Another good option is credit unions. We've had a lot of good feedback from folks at credit unions who want to open up accounts at credit unions. So, but that's a great feedback. I mean, and that's really, in our experience, we don't force people to go to a specific bank, because a lot of our customers, they want to have their account, at a bank where they have a relationship. They want to have an account at a bank where they can walk into the branch, not a bank all the way across the country. So, of course, the fees that are charged, the minimums that are required, are going to vary from bank and institution to institution. So that's something, of course, that you're going to want to consider when you are deciding where to open up the account. Okay, so let's go on. So here we're talking about investing in equities. So of course, one of the requirements to invest in equities, of course, is going to be stocks, mutual funds, ETFs, etc. So that's going to be, you're going to need a brokerage account in order to invest in equities. You cannot go and open up a bank account and buy Netflix stock. You need to have a brokerage account to do that. So if that's one of your objectives, you need that brokerage account. And like the good question we got at the beginning, you can have both. So you can move money and you can get the benefits and features of both types of accounts. Okay, so we got a couple more questions. Thanks for all the activity and questions. We appreciate it. So, and that's a question more that's directed back at the gentleman or individual who asked about the Bank of America minimum. So talking about how Certain banks, online banks, don't require a minimum balance and don't charge fees for basic transactions. So yes. So like I said, I mean, there's certainly a lot of, it's a competitive space. You could easily probably find a bank that would be willing to waive your minimums, or if you have other balances there, they may be willing to do so. And then we've got a question from regarding a beneficiary designation. So good question. So let's take a step back and recognize one of the themes that I've been talking about here, which is that what governs the account are the plan documents. So though, like with our customers, those are our documents. So as part of our setup, we provide a beneficiary designation form, and that's the document and the tool that you use to designate who the beneficiary is going to be when you pass away. So some of these institutions may have their own separate beneficiary designation form, but really what you want to use is our document. That's the one that governs the account. So to answer that good question about how you designate the beneficiary. Okay, so finally on their I should say next slide, we're talking about checkbooks. So in big picture, I mean, that's one of the features that people love about these accounts is they want to be able to have checkbook access, because a lot of times, there's an opportunity to invest in something and you need to be able to act quick, or that's the only way you can make the investment is with a checkbook. You got to pay expenses, say related to your real estate investments. So you need that checkbook. So with both the bank account and the brokerage account, you're going to have checkbook access. So Fidelity, Schwab, TD, E-Trade, these are all places that open up accounts for solo 401k plans where it's a third-party plan that does allow for investing in alternative investments. And all of those brokerage firms do issue checkbooks. You do have a population of firms that will open the account but won't issue a checkbook. So say like an Interactive Brokers or a Tasty Works, just to name a couple. So of course with a bank, yes, it's going to be a checkbook. So you're going to get that checkbook feature with bank accounts, and that's going to facilitate all those alternative investments, taking a loan, distributions, conversions. You got that checkbook access. So outgoing wires. Yes, you can do outgoing wires from both brokerage accounts and bank accounts. So with your popular brokerage firms, we've got those forms that are there. We can provide them easily to you, so you can use that. Sometimes you got to go to the branch, of course, to initiate the wire. Same thing with the bank. I mean, you're going to be able to wire money out of that account. Now, and one of the things that I mentioned earlier is that the ability to ACH. So that's actually a difference. So you generally can't ACH from a brokerage account, but of course you can ACH from a bank account. And practically speaking, that can make a difference when it comes to making an investment. Some of these alternative investment providers, like your private placements, things of that nature, they want their investors to ACH money to make the investment. So practically speaking, that may be a reason that you would need a bank account. Cashier's checks or bank checks. So that's a situation, practically speaking, where you're going to an auction, say. In order to attend that auction, you need a bank check. So brokerage firms, they don't issue bank checks for these types of accounts. Banks do. So that would be another reason practically why you might need a bank account. So you might have that brokerage account and again add on the bank account. So when you need that cashier's check, you can easily get it. You just move money over to the bank account, then get the cashier's check. Easy peasy. So debit card. So that's another difference. So, and again, practically speaking, it could be because of you're investing in real estate. You need to pay for an expense. So, you've got to pay the, whatever it is, the landscape, the paint, the person that has to come and, fix the toilet. So you need that debit card access as opposed to a checkbook. That's where the bank account can be very helpful because you get a debit card associated with the account. Brokerage accounts, no. In the past, they used to, but they don't do anymore. Contributions. So in terms of making contributions, you're able to, you might have a pre-tax account at a bank, a Roth account at a bank. You might have a same thing at a brokerage. So you can make your contributions to either account. You can put it into the bank account, you can put it into the brokerage account. So the key is that you do it under the rules, which means subject to the limits, by the deadlines, etc. Okay, so we got another follow-up question regarding the beneficiary election. So the beneficiary election, remember, it's taking a step back. What governs these accounts are our plan documents. So as part of our establishment document packet, we provide the beneficiary election form. So that is the form that's going to govern the account, govern the whole plan. So you don't have to do it at the account level. So if you have a bank account and a brokerage account, you don't need multiple beneficiary designations, because again, just like you don't need multiple sets of plan documents, these are all sub accounts underneath your one plan. So you got one set of plan documents, one beneficiary election form that governs the whole thing. You could set up a brokerage account near the beginning, then you like the features of the bank account, you shut the brokerage account down, you open up a bank account, you move your cash over to the bank account. You don't have to get new plan documents. You don't have to get a new beneficiary election form. So it continues to govern the account. Okay, so we'll give time for people to ask more questions. We appreciate everyone taking the time to join. Like I said, please like this video and subscribe for more videos like this. We're going to be doing this on a regular basis. So look out for more announcements of future presentations. And so we've got some more questions here. So let's say I want to put $19,000 in a Roth solo 401k and $37,000 in an after-tax contribution to my solo 401k, and then convert the $37,000 into the Roth. Do I need two accounts? The answer is yes, because you have to keep the voluntary after-tax contributions in a separate account. In order to satisfy the mega backdoor Roth rules, you've got to have separate accounts. So that means you got one account for the voluntary after-tax, a second account for the Roth. And if you've got pre-tax money, you might have a third pre-tax account. And if your spouse is participating, now you've got 6 accounts. And if you each have bank and brokerage accounts, now you got 12 accounts theoretically, right? So you really got to be able to keep track of it. But yes, you would need 2. You put the 37, subject to the rules, you put the 37 into the after-tax, and then you could convert it over to the Roth. So can a spouse participate? We've got another question here. Can a spouse participate in a solo 401k if they're not involved employee of the business? Okay, well, that's a little off topic, but we'll field it. Got some more time. I appreciate the questions as always. So I don't want to discourage that. So the answer is no. So in order for this spouse to participate in the solo 401k, they need to be working in the business and reporting their own self-employment income. So their own Schedule C, or if it's an S corporation, their own W-2 from the business, etc. So great question. So please, everyone, again, thank you so much. Let me know if we got any more questions. We do have a little bit of time. Please like this video and subscribe again for more videos like this. All right. Well, that concludes today's presentation. Okay, we got another question here, just at last one at the wire. Can I do the Roth transfer just a few days after contribution and after-tax deposit? Can I have bank and brokerage account? Okay, so yes, you could move it over to the Roth account straight away. Can I have a bank account and brokerage account. So we got that. That's a classic question. So the answer is yes. You can have a bank account and a brokerage account. So the key is that they're just both opened up under the name of the plan, under the EIN for the plan. You can move money between accounts. It's not a taxable event. It's not a reportable event. Thanks for that good question. Okay. Well, thanks again, everyone, for joining. And until next time, take care.